Good morning to the ones who are watching this session recorded and live back at home as well. Welcome back to CA Foundation Principles and Practice of Accounting. We were discussing chapter 6 in yesterday's session. Am I right? In chapter 6, so far we're done with the first unit, bills of exchange, the second unit, goods sent on return or approval, third unit, consignment. Yesterday we started and finished the topic of average due date, and our today's target is account current. By this we'll complete the chapter of special transactions, that is chapter 6. Are you ready to get started? Okay. Let me make you understand what exactly do we mean when we say account current. When we say it is account current, it is not current account. So it is not a ledger account, it's a statement. First thing that you should remember is it's not a ledger account, it's a statement. Ledger account is prepared according to the system of double entry. Here we don't follow double entry system. A lot of accounting rules are not followed. I'll tell you what is the accounting rule that is not followed. We'll understand it later. Later, when you get that doubt, the answer is it is not an account, but it is a statement. It is not prepared in line with rules of double entry. It is prepared with a specific objective. Usually, double entry system when we follow, it has bigger objective. It will help us in processing the data and transactions into journal, ledger, into trial balance, and into financial statements. Whereas special purpose means it is not exactly in compliance of double entry, but it has a specific objective. And at the end of that statement, that objective is served. There is no carry forward of this into final accounts. Do you get what I'm trying to tell? That's a special purpose statement. So it's a special purpose statement. And the really sad part is this will no longer be there in the new syllabus. This unit will get removed. Very sad and unfortunate, but it's a very, very valid one and very practically good one in the realistic business. This will be very much useful. Let me make you understand the concept of account current. How does it come into picture? Let's say I and you are acquaintances. We met each other, then we started talking to each other. I understand that I do a business and you do a business, and our businesses are connected. We can actually do business with each other, and we go down to start doing business together. So how do we start doing business? I sell a specific product, what you basically need. So I'll start selling that product to you. You buy that product from me and you sell it to customers. So I am your supplier, you are my customer. Who am I? Who are you? I'll give the product to you. You buy it from me and you sell it to your customers. This went on happening. Let's say today you purchase goods worth 10,000 from me. You give 10,000 rupees cash to me, or you did phone pay. Got it? So I took phone pay and then I gave you money. Gave you goods. And again tomorrow you came again, you bought goods for about 10-15,000. Again you did pay money and then go away. See, we are still becoming friends. We just know each other. We just started business. And you do phone pay, Google Pay, Paytm. Can you say that you will pay later? If you say I'll pay later, I'll say Paytm. Like, shall I do Paytm tomorrow? I'll say TM pay. I would say I would ask you to pay. Sorry, I would ask you to do Paytm right now. I won't let you say that. I let you go away with the goods now and then you pay me tomorrow and I'm fine. No, that doesn't work. But over a period of time, because of the repetition of the transaction that we have with each other, I'll start trusting you. I'll start trusting you. And you don't even have to come. You just call and then tell I need this much quantity of goods, this specific variety. I'll dispatch the goods to you. I will be like, okay, whenever you have money, you pay to me. You can pay to me tomorrow or after a week. I'll be still fine with it. So that credit relationship will grow between both of us. And when I give the goods to you on credit and you pay me 1 week later, the bonding is not just from my side, no. From your side also the trust has come to me, wherein you didn't buy goods from me. Like whatever for the goods that you bought, you paid the money. Immediately I need some 1 lakh rupees for some specific purchase. So I will have the liberty to call and ask you, hey, can you pay me 1 lakh? Like however I'll send the goods now whenever you ask. Can you pay me 1 lakh in advance? I need it for some adjustment of mine. You'll be like, okay, fine. You'll pay 1 lakh. Next month you'll order some 60,000 rupees worth of goods. Balance 40 you will order in another 15 days or something. So you will also be willing to pay me in advance. I am also willing to give the goods to you in advance. Do you get this? Over a period of time when you're taking goods from me and then going down below HS Academy, you see the bank. You see there 8% interest on money kept in bank. Senior citizen, no, you people. Look at how you're sitting like this. Sunday morning, that old lady and old man will get up like that. People are sitting. So you saw that old senior citizen also will get 8% interest. You are impressed. Then you know what will you do? You'll buy goods from me, 1 lakh rupees. I've given the goods. You should pay me money. You have 1 lakh rupees in bank account. But you are like, what if I give the money 1 month late? For that 1 month, I'll get 8% interest when it is in bank. So you will give it a try. You will call me and then tell, hey, I don't have money right now. It's money is stuck. Can I give after a month? I'll say, okay, boss. That's fine. You give me after a month. For 1 month, you kept the money in bank. You got 8% interest. With that 8% interest money, what you get? You can eat masal puri every day. You're like thinking, by just giving him money 1 week late, sorry, 1 month late, I can eat masal puri every day. If I give him 1 more month late, I can eat masal dosa in the morning, masal puri in the evening. In his money, I will do breakfast and evening snacks together. So after 1 month again, you will tell a little bit of difficulty in the business. Money is still stuck. Can I pay you 1 more month later? Please, please. I'll be like, it will be a little difficult for me, boss. I might have to pay interest to my supplier, but it's okay. Friend, no. It's okay. You pay me 1 more month later. So I tell this. And after I tell this, every day I see you eating dosa in my SLV. Every day in the evening, I see you masal puri in the evening. I am paying for it. Why? I've taken loan from the same bank. I need to pay myself. I've taken loan from the bank and I'm paying interest. I used to eat masal puri in the evening. Now I've stopped eating masal puri in the evening. Why? I need to pay interest. No. So I'm like, okay, if I stop eating masal puri every day, I'll save this much money. This much money I can pay interest. So I am thinking of that way. And then every day I'm walking, I'm looking at that masal puri gadi and then walking. Sacrifice, sacrifice. And then I listen to 2, 3 motivational songs and then walk away. And then I am seeing you people like fulling on like putting motivating and like you full put on weight. I'm like, how come you people are able to eat masal puri every day? Then I see in the morning you're eating masal dosa every day. I'm surprised. Then when I go to bank, that bank manager will tell me, what is this, sir? You are taking loan. Your friend is keeping so much money in the bank. He's getting interest. You are giving interest. What kind of friendship is it? That's when I understand. Oh, you have money, but you're not paying me money. You have money, but you're not paying me. You are intentionally paying 2 months late so that you will earn interest, because of which I am paying interest. So now I have understood. But friendship I didn't want to spoil. So I didn't want to confront you. Now you know what I'll do? You'll call me and ask for goods. I'll be like, oh, just out of stock. Just now stock is out. If it was there, I would have given you. You'll be like, ayyo, then what do? Somebody else will come to me and ask for goods. I'll start giving goods to them. They'll buy goods from me. They'll pay me cash. Unfortunately, like what happened in average due date, no, like what happened in Del Credit Commission. So that person to whom I sold the goods and you happen to be friends. You both meet and then you both understand that you're dealing with same product. And you will tell him the difficulty of you not getting goods locally, because of which you are now getting the goods from different state, different supplier, and then you're paying for transportation and everything. Your friend will tell that he gets the goods Bangalore only, locally. Then you will say, no. Previously we used to get, now it's not available. Then your friend will say, no, here only, Jayanagar only that supplier is there. You will be like, which supplier is it? Then your friend will give your contact. You will type the number and then you press call, my name will come. You will be like, this guy is my friend. We are very good. Like I used to buy goods from this guy only. Now it's not there. Then your friend will tell, just now I bought goods. It's there. Then you will call me. Say, wait, I'll prove it to you. You will call me and ask, hey, I wanted goods worth rupees 1 lakh. Like, no man, it's not there, out of stock. Then you will keep the call and then see, I told you it's not there. Then your friend will like, no man, there's something wrong. Wait, let me check. And then he'll call in front of you and then he'll ask me, goods worth 1 lakh. Really, sir, where do I have to send? You tell me the address, I'll send. Then you are angry now. You are full on angry. You straight away walk into the room, open the door, slam the phone, and then stand. What the hell is wrong with you? I thought you were my friend, but you're not anymore. I'll be like, relax, sit, we'll order 1 cup of coffee. What happened? You'll be like, I don't drink coffee, I only eat masal puri. I'll be like, I have stopped eating it. Then you'll say, how can you do this to me? I'm like, what did I do? You have goods, but you're telling me that you don't have goods. I'll be like, sit. You eat masal puri. You know who's paying for it? You will say, me. No, me. You pay me 2 months late saying that you don't have money. I know that TJSP bank manager is my friend also. You have money in the bank, but you're not paying me. With that interest, you're eating masal dosa, masal puri. And I've taken loan from the same bank to pay for the goods what I sold it to you, for which my supplier is charging me interest. And for that, I have stopped eating. Masal puri. I have stopped eating masal dosa. Look at my weight. I would say I've reduced 10 kgs, which you have put on. My loss is your gain. My loss is your. So we can't do business like this anymore. We're like, oh, gota. Now he is also caught. Now we are in a very awkward situation. Like tit for tat. He did it and I did it back to him. Now if we do like this, we can't do business. Now from now, no, we can't continue business only. Why? Now whenever I sell him goods, if he says he'll pay 1 week later, let's say genuinely he doesn't have cash, I won't believe. Trust is very easily broken. Very difficult to gain it again. I'll give you one more opportunity. Honestly, you gained your trust back. Stay honest. Honesty is something it is very difficult, but it will give you immense rewards. And this group of people where you are sitting now, this is the place where you should earn your respect and trust. You might say, sir, what sir with this nonsense people, what I should have. Today you might think that you're sitting with fellow 199 or 200 teenagers, like about 220 students in the class. You're sitting with about 200 among 200 teenagers in the class, with whom you don't want to impress the other 200 people sitting in the class. You don't have to show it to them that you are honest, you are confident, and you are a good person and trustworthy person. But remember, 4 years down the lane, this will be the set of chartered accountants with whom you will be surviving in this world. All of these people sitting around you will become chartered accountants. And let's say you have a client, you are getting a client in which the other person who's sitting in this class is a CFO. So your friend in this classroom becomes CFO of a company and you are in practice, and that company is going to give you a specific assignment, audit assignment or some consultancy or something. That CFO sitting there will say, this guy, yeah, I know him from CA Foundation time, not trustworthy. Avagle ange, inivag henge. No. Some other client. If he tells like that, you lose it. And I'm not telling this just to make a statement and then look fancy. This happened. I happened to meet a few people in the classroom, and one of them is my partner with whom I practice right now. One of them is a very close friend of mine. This very close friend of mine is a CFO in a stockbroking company. We met in CA Inter times, and after that, I am friends with this guy, I am friends with that guy. We both are not partners. Sorry, we both are not friends. Like they both are not friends. And it so happened to be that this guy who's CFO in this company believed that guy so much that he gave the entire internal audit assignment to that friend whom we met in CA Inter. Because that guy was very focused and he was honest to the core. He used to bring in new perspective to the table every time we sit and talk. And he knew that that guy started practice. And this is a very big firm. This company is very big. And that firm, what the other friend of mine is practicing, is not so big. It's a very small firm. It's been 2.5 years old. So he gave it to him and not the firm in which I am practicing in. So this happened to be possible only because that bonding was built in this class. And even now, whenever it happens and we talk about any of our friends, so the first thing that comes to your mind is that what was that guy doing in class? So you are creating impression in 200 chartered accountants' mind with what you talk in the class and how you behave in the class. So be little good. You get it? So one friend will be like, that guy never did homework, always was thrown out of class. I don't know how he actually passed the exam only. That is the kind of impression that you're leaving on fellow friends of yours who are going to become your fellow chartered accountants in the industry where you are working. Because all old chartered accountants will be done, no? It will be new set of 200 chartered accountants, 300 chartered accountants in the market. By the time you take up your CA foundation and finish your CA final, at foundation you meet 200 people. At Inter you will meet some 200, 250, 300 people. During your orientation program you will meet another 100. ITT program is there. There you will meet another 100. 500 over. During articleship of 3 years you will meet another 100, 150 from different offices. And during your final journey you will meet another 100, 100, 150. So it's about 700, 750 people whom you meet in these 3-4 years will be chartered accountants in practice. So you'll have about 700, 750 contacts who are in the same industry, whom you know and who knows you. Whenever any assignment is to be given, it will come through any of them. So will they be like, yes, good guy, or like, oh, that's important. So here coming back to our example, here the trust is broken. We can never do business in this way. Because if I sell goods to him, I expect money from him instantly. Or if I ask him, can you give me 10,000 rupees advance before you actually buy the goods? He will also be not willing to give me. Why? He also knows that I know that there is a bank which will give 8% interest. We can never do business now. We should do only cash business, cash and carry. But Do you really think cash model of business is successful in a larger scale? No. So he cannot buy goods from me. I will not sell goods to him. We will only do business with somebody else. This can happen with anyone and between anyone. So how do we solve this problem? There comes a solution, account current. There comes a solution. What happens in account current is every unit of goods that I have sold to you, every unit of goods that I have sold to, I will treat it as loan given to you. Every rupee that you pay to me, you will treat it as loan that you have given to me. For every rupee that I give you, for every rupee that you give me, we'll treat it as loan that we have given to each other. We'll fix upon an interest rate. Let's say 8%. Let's say I've sold goods to you at 1 lakh rupees. I've sold goods to you at on 1st of January. On 1st of, if you pay the money to me on 2nd of January, I will charge 1%, 1 day's interest and collect it from you. If in case you pay the money to me on 1st of January, I will sell the goods to you on 2nd of January. You will charge 1 day's interest to me and then collect interest. By doing this, you know what will happen? You have money in the bank. You would have to pay me money. Whether you keep the money in the bank and pay me after the month, or you pay me right now the moment you purchase, it would not affect you. Why? If you pay the money 1 month late to me, I will charge you 8% interest. To that 1 month the money is in the bank, you will get 8% interest from bank. How much ever is interest expense will be your interest income. So payment is not a decision making to be done by you. You don't have to decide when to pay. Oh, 15 days credit period. I have to pay within 15 days. If you pay 16 days, interest will come. So you have to remember that 15th day and then pay. No, it's okay if you pay 15 days late. Why? To the extent of 15 days late, I will charge you interest. To the same extent of 15 days, you will get interest from the bank. You will get interest from the. Are you getting what I'm trying to tell? Pakka. And this is a running statement. This is a meaning one more transaction happens, you don't have to draft it completely new. Within the same statement, you can go on adding the transactions. And to make it more flexible and to make it a running statement, what we do is, let's say we're doing 1 month transactions. We are not doing for entire financial year. We're doing account current for 1 month. For the month of January. For the month of, I have sold the goods to you on 1st of January. When did I sell the goods? You paid the money to me on 5th of January. You paid the money to me on. If you would have paid the money to me on 1st of January, should I have charged interest? No. If you would have paid 2nd of January, should I charge you interest? 1 day interest. How many days interest? That is for January 1st or that is for January 2nd? Very good. You got this correct. So I sold the goods to you on 1st of January. You paid the money to me on 5th of January. I should charge you interest for 2nd January, 3rd January, 4th January, 5th January. How many days interest? 4 days. How many days? I taught this to you because if you would have asked straight, some of you would have told 5, some of you would have told 4, and would have held each other's collars and started fighting. But now you understood now how many days interest? 4 days interest I should charge. Are you getting it? We won't do like that in account current. What I'll do is, we are doing account current for 1 month. I go on selling goods, whatever you ask. Whenever you have money, you will go on paying me the money. End of the January month, 31st of January, we both will sit. We both will take one tissue paper. And then we'll start writing there. What do we write there? I'll write 1st of January I sold goods to you. I'll charge you interest on that from 1st of January to 31st of January. I'll charge you interest from 1st of January to 31st of January. 30 days interest I will charge. You will tell like you paid me money on 5th of January. That is like loan that I have taken. You will charge me interest from 5th of January to 31st of January. You will charge interest for 25 days or 26 days. I will charge interest to you for 30 days. So 4 days is the net difference. Are you getting it? 4 days you should pay to me with the amount outstanding. That's how the account will be closed. Did you understand? Yes or no? Pakka. Sir, for this can't we do average due date? Yes, we can do average due date. Yes, we can do. For both the transactions, we'll find one base date and find average due date. Average due date is not the date on which we are settling. We're settling on 31st of January. From average due date to 31st of January, you'll find interest added to the principal amount. We'll get the amount to be settled. Who should pay whom? We did that green, red, X, Y problem. Same thing. Sir, then why do we do account current? In average due date, we did 2 tables. You remember? One is for goods sold by X to Y. One is for goods purchased by X from Y. We did 2 tables. We did one below the other. Here, what do? We write one next to the other. When we write one next to the other, One will become debit, one will become credit. One will become debit, one will become. There what did we do? First we did coding, then we did decoding. Then the decoding, say we found the average date. From that average date to that year end, we computed interest. Correct or not? Then we added it to principal. Instead of doing that formula after, what do? We put that formula also into the table only. We'll put that formula. See, first we did two tables, then we found average due date, then we did interest computation. What do is this average due date computation will be eliminated. Average due date is done for the sake of interest. No, here we don't do average due date. Instead of average due date, straight away we'll compute interest. That is not computed outside the table. We'll try to put that interest computation into the table, and that's how we do it. Did you get what I'm trying to tell? I will teach you how to do, and for a problem of account current, I will prepare average due date and also show it. Whoever is watching this session live or recorded, if you have not seen average due date yesterday's session, please stop watching this video, go back, finish watching average due date, and then watch account current. That is the right way of seeing. Do you get it? Now have a look at little bit of theory. So what is account current? It is a running statement, not an. This is prepared between buyer and seller. I was a seller, you are the buyer, or it can be between debtor and creditor, same thing. Or financier and borrower. I have given the money and you borrowed money from me. Or it can be between banker and account holder. This is prepared for a specific basis, periodic basis. Need not be an accounting period. For 15 days you can prepare account current. For 1 month you can prepare account current. It can be prepared for any period. And it is at the discretion of the transaction, parties to the transaction. It's between us. I can say we'll prepare from January 15th to February 15th. It need not be January 1st to 31st of January. Why? I told you this is not bound by the rules of accounting. Why? This is a special purpose statement. This is not a ledger account that we prepare. Got this? Yes. Unlike average due date, which is prepared on specific date, account current is prepared for specific period. Average due date is on a specific date. This date I am paying. How much should I pay? Account current is statement. And I will tell you little later why is it that we should do account current. If for the same problem, average due date is applicable and account current can also be applied, then why do we read a separate chapter? Why don't we do average due date only? Valid question, no? If the same question can be solved under both the approaches, then why do we apply the concept of account current? Why did they give another unit? I'll teach that also to you little later. So then there are three methods. One is interest table method. Second one is product method. Third one is balance of product. It is the same. Interest table method is, now you do, let's say on 1 lakh rupees, you need to compute interest for 30 days. You will do 1 lakh into 30 by 365 into 10 by 100. One more transaction is at 50,000. 50,000 into 20 by 365 into 10%. We need to do like this. Identify individual interest. That is interest table. Product method is, here for every item you are dividing by 365 into 12%, dividing by 365 into 12%, common, no? So what we do, we take multiplication. On the total, we'll do divided by 365 into 10%. That is product method. Are you getting it? Balance of product we'll be doing towards the end of the day, or we'll be doing it tomorrow beginning. Yeah. So don't worry about the balance of product method. And either of the methods you follow, the answer that you get will be same. It is just mathematical convenience between the methods. It is just mathematical convenience. Now, before we start with the problem on account current, one specific thing that we should remember, which is very, very important, because majority of the students, if they get problem on account current wrong, it is because of heading. It is because of heading. They get the heading completely wrong. So I'll tell you how to remember the heading. If you write the heading wrong, your entire answer will be wrong. Do you get it? So now go on telling alphabets. ABCD. A B C D E F G H I J K L M N O P. Then L M N O P Q. Backward 10 seconds. L M N O P Q. Pause. Once again, backward by 5 seconds. L M N O P Q. R is note this point. What is it? R first, then first receiver's name, then sender's name. First we should write, then we should write. Do you get this? For example, if I write Varun in account current with Diksha, if I write Varun in account current with, who is the receiver? Very good. Who is the sender? So account current is prepared by Diksha. Account current is prepared by From the perspective of Diksha, she'll write in the books of Diksha Varun account. She prepares it and then she gives it in saying, this is the money that you owe me. This is the amount of interest that you owe me for delayed payment. That is account current prepared by Diksha given to Varun. So the name will be recipient first. Then comes the sender's name. Recipient first. Then comes the sender's name. So if we write, for example, for the first problem, if we write the account current name as Shyam in account current with Nath Brothers. Shyam in account current with, who is the recipient here? Who is the sender? Very good. So this is in the books of Nath Brothers, Shyam account. In the books of Nath Brothers, when you're preparing this account current, whose perspective should you be thinking from? Whose ledger account are you preparing? You prepare a simple ledger account how you used to prepare in chapter 2, unit 2 with extra columns, period and interest. Debit side and credit side also you have to put 2 columns, period and interest. Did you get it? So simple ledger, debit, credit, date, particulars amount, 2 extra columns, period column, interest column, period column, both sides, debit side, period and interest, credit side, period and interest. Got it? We'll quickly do first problem. You'll understand better. Come to illustration number 1. You don't have to copy. Just focus. Come to illustration number 1. I'll give you time to copy. I'll tell you when to copy. But yesterday full Malena. I told you no. Match will be washed away by rain. Now people are fighting. Rain saved Pakistan. No. Some people are rain saved India. Rain won the game under Duckworth Lewis system. Okay. We are doing illustration number 1 from page 228. We're doing illustration number 1 from page 228. No one to be blamed. It was very evident. 15 days before the match only, there was prediction of 90% chances of rain. 50 overs happened. That is surprise. They should have made it in a T20. Both the teams would have played 20 overs. In between 10 overs time, Akash Tupra will come now. Prepare account current for Nath Brothers in respect of following transactions with Shyam as per interest table method and product method. Method we'll see later. Focus on the first transaction. Now, who's preparing this? Account current for whom? Hey. Right there. Nath Brothers, sender. Shyam, receiver. Nath Brothers, sender. Did you write? Nath Brothers as sender and Shyam as receiver. Very good. Now tell me what is the name of the account current? Nath Brothers. Hey. Everyone. Nath Brothers in account. Shyam in account. Shyam, Paka. Very good. Shyam in account current with. This is like in the books of Nath Brothers, we are preparing Shyam account. In the books of Nath Brothers, we are preparing. Very good. Now, don't worry about the topic of account current. Just focus on the ledger. Let's start with the first transaction. What is the first transaction? Goods sold to Shyam. Cash. Yakapa. Ratri dina idilva. First transaction. Okay. 2007. September 16. What is happening on September 16? Goods are sold to. Very good. How much? 200. Yeno tappidala. It's okay. That is the due date. This has gone little up. It should have come little down. Jada udna mat. Goods sold to Shyam. Now who are we accounting for? Nath Brothers. What is the journal entry when the goods are sold to Shyam? Shyam account debit to sales. This is like Shyam account. This is like, so what do I write here? To sales account. To, what is the date of transaction? 16th of September. What is the amount? Everyone understood 200? They've also given that due date. What is the due date? 1st of October. This transaction is due on 1st of October. Though you sold the goods to Shyam on 16th of September, you have told him you pay the money on 1st of October. If he pays the money on 1st of October or before 1st of October, we are not going to charge him interest. We are going to charge him interest only if the payment is after 1st of October. Clear? Pakka? Very good. What's after that? October 1st. Cash received from Shyam 90. What is the entry for cash received from Shyam? Cash account debit to Shyam. This is Shyam account. Here I should write buy cash. Shall I write on the credit side? We'll write buy Shyam account. Sorry, buy cash. How much? 90. What is the date of the transaction? There is no due date. So due date and date of transaction both are 1st of October. Are you getting it? Unless they give a separate date, due date and date is same. Same date the transaction is due for settlement. Unless they mention a separate date as due date, the date of transaction itself is the due date. Got it? Very good. After this, October 21st. What's happening on October 21st? Goods are purchased from Shyam 500. When you purchase goods from Shyam, entry will be purchase account debit to Shyam account. This is Shyam account. Here I'll write buy purchase. Date is 21st of October. Amount is 500. Have they given a specific due date? Yes, 1st of December. Let me write 1st of December. Clear? What is after this transaction? 1st of November. Oh, Yapi Kannada Rajyotsava. Pay to Shyam 330. When you pay to Shyam, what is the entry? Shyam account debit to 330. This is like Shyam account. What do you write? Buy cash. Say pay to Shyam. To cash. My God. If I trust you people, then go in the to cash account. 330. Date is same. What's after that? Again paid to Shyam. 330. December 1st. What is the journal entry? Now tell correctly at least. Shyam account debit to cash. In Shyam account I'll write here to cash. Date is 1st of December. Amount is 330. Got it? What is after this? Goods purchased from Shyam 500. What is the journal entry for purchase from Shyam? Purchase account debit to. So in Shyam account I'll write buy purchase. Write buy purchase. What is the amount? Due on 1st of January. Transaction is happening on 5th of December. Clear? What is after this? Goods purchased from Shyam. How much? 200. December 10th. What is the journal entry when the goods are purchased? Purchase account debit to Shyam. In Shyam account I'll write buy purchases. Amount is 200. December 10th is the date. Due date 1st of January. Clear till here? We have another two transactions. Let's write them. January 1st. What's happening? Paid to journal entry for payment to Shyam. Shyam account debit to cash 600. This is like Shyam account. I'll write to cash 600. Payment date 1st of January. Due date also will be same for payments. 1st of January. What's after this? Goods sold to Shyam 20. This is happening on January 9th. What is the entry for sales? Shyam account debit to. Very good. 2 sales 20. Date is January 9th. Due date is 1st of February. Clear? What is after this? That's it. Everything else is done. Account current to be prepared on 1st of February. Okay. Calculate interest at 6%. Shall we do it? Now very simple. Whenever due date is available, take due date. Whenever due date is not available, date of transaction itself will become due date. Did you understand that? We have already written it. Now, from the due date till the date on which account current is prepared, compute interest. Compute and write that in that particular transaction next, align into that particular transaction only. So there will be interest payable, there will be interest receivable. Find the net difference, that will be in the net amount of interest. There you know what we used to do in average due date? We used to find the net product. And then we used to find the net product is to be complied to be the date, average due date. From the date till the account current, we used to find the interest. Here what do? We don't do coding decoding. For each of the days, for each of the, straight away find the interest till the date of account current. Are you getting it? So all of this is the loan given by Nath Brothers to Shyam. All of this is the loan taken by Nath Brothers from Shyam. So for this, you will charge interest. For this, he will charge interest. Net difference is the interest payable or received. Shall we do it? To compute interest, we want period. So now tell me, from what date to what date do we find the period? Let me repeat. From the due date to the date of account current. From the due date to the date of, straight away finding the period. We are not doing coding, we are not doing decoding. There, we assign one number to each of the dates. Based on the amount and dates, we found the average due date. And average due date to the date of payment or settlement, we used to find interest. Here, simple. For every transaction, from the date to the date of settlement, find interest. Find interest. Shall we? Now compute. 1st of October. When are we preparing account current? 1st of February. 1st of how many days? October has 31 days. First day if you settle, no interest. So count from second day. So 31 minus 1. 30 days in October, 30 days in November, 31 days in December, 31 days in January, and 29 days in February. Why? 2008 is leap year. What do we get? Huh? Sorry. 1 day in February. 1 day in February. Oh. 123. Shall we find period for everything first? Very good. Then November. 1st of November means November has 30 days. 1 day is gone. 29 days in November, 31 days in February, 31 days in December, 31 in January, and 1 day in February. 92. Here, 1st of December. So 30 days in December, 31 days in January, and 1 day in February. Here, 1st of January. So 30 days in January, 1 day in February. Here, 1st of February means 0. 1st of February to 1st of February is 0 days. Am I right? Okay. See, I can make all of this different color. Why? You don't have to write this in exam. This you don't have to write. Sir, why have you written? So that you understand how it is computed. When you're revising, it becomes simpler. Here, 1st of October to 1st of October to 1st of February. October has 31. Take 30 days in October, 30 days in November, 31 in December, 31 in January, 1 in February. 120. Here, 1st of December. So 30 days in December, 31 in January, and 1 in February. 62. Okay. January. 30 days in January, 1 day in February. 30. 1st of January means again 30 plus 1, 30. Got it? Shall we now compute interest? Very simple. 200 into 123 into 123 by 365 into how much percentage? 6%. Compute. 4.2 decimals you take. If the third decimal is more than 5, round up. If the third decimal is less than 5, round down. Understood? 5 or less than 5, round down. Okay. 330 into 92 by 365 into 6%. 4 point. Very good. 330 into 62 by 365 into 6%. 3 point. Very good. 600 into 31 by 365 into 6%. 3.06. 05 third digit in. So 3.06. Okay, here 20 into 0. 0. It is 600 into 31 by 365. Shall we do it on the other side? Here also same. 90 into 123 by 365. 365 into 6%. 1.82. Got it? And over here it will be 500 into 62 by 365 into 6%. 5.10. Correct? How about here? It is 500 into 31 by 365 into 6%. 2.55. 200 into 31 by 365 into 6%. 1 point. Everyone got this? Very good. 1.02. Now all that we need to do is, see, remember, this is the interest receivable. Sorry. This is the interest receivable. Correct? No? Because these are the sales made. This is the interest payable. Now find the balancing figure. Where is it more? And this side is the amount receivable. This side is the amount payable for purchases. Correct? Debit is receivable asset. Credit is payable liability. This is more. Which side is more? Debit side is more. Credit side is more. Debit side the total is more. We'll write 15.46. 15.46. Balancing figure is 4.97. So try and understand here. Listen to me. Listen to me. You are supposed to receive 15 rupees. You are supposed to pay some 10 rupees or something. So you are supposed to receive 4.97 rupees extra. That is the balancing figure found in interest column. Am I right? This will be posted to amount column. This will be posted to. Now you tell me this 4.97, whatever I found as balancing figure in interest column. Should I write this in debit side amount column or credit side amount column? Debit side amount column. This is debit balance, so it's on the credit side. Let's say, one second. These are sales that you made. These are this 4.04, 4.99, 3.36, 3.06 is interest receivable. Yes or no? This is purchases made. So this 1.8, 5.1, 2.5, 1.2 is interest payable. Am I right? So interest receivable is more or payable is more? And this 200, 330, 330, 600 is receivable or payable? This 90, 500, 500, 200. Now when receivable interest is more and payable interest is less, balancing figure will come on this side, no? From interest column, when I shift it to amount column, which side should it come? The reason is this amount column represents sham account. Interest column represents interest account. In interest account, if I write by sham, in sham account, I should write to interest. From one ledger, if you post it to other. In interest account, if you write by sham, in sham account, it will come as. Did you understand this? But it's happening in the same side. It's happening in the. This is sham account. So I cannot write here by sham. If I write here by sham, we will say like sham account, you wrote sham account. In the sham account, you're preparing one column for interest. That interest column here is representing interest account. Interest. Now you are shifting balance from interest account to sham account. So I would have to write here on the debit side to interest 4.97. Did you get it? If you want to remember in simple terms, this side if you get balancing figure, you put that side amount column. That side if you get interest amount balancing figure, put it to this side amount column. But did you get the logic? Why is it so? Pakka. Interest column represents interest account. Interest column represents, we are transferring the balance from interest account to sham account. In interest account, if you write by sham, in sham account you should write to interest. Are you getting it? Then you will say, sir, then why did you write by interest here? Write by sham. This is not interest ledger. This is sham account. Within that, I've just drawn one extra column. So in sham account, I can't write by sham account. So I'll write by interest. Got it? Yes or no? Or in other simple terms, you don't want to do it. You computed interest here, no? This interest receivable. This interest you write here. And then this interest you write here. It will come to be same. Same impact. Debit side interest total, you write in debit side amount column. Credit side interest total, you write in credit side amount column. Impact will be same. Now what do you do? Debit interest is more, credit interest is less. We do total debit interest minus credit interest and then wrote it. That is debit balance. Should appear in the debit side amount column. Did not understand. Anybody who did not understand? Got it? Now find the balancing figure in the amount column. Which side is more? 200, 330, 330, 600. I think debit side itself is more. 1484.97. Balancing figure. What do we get? 190, 194.97. This is debit balance. Who is preparing this? Nath brothers. Nath brother will give this to Shyam. And Shyam has to pay 194 rupees 97 paisa. Shyam has to pay how much? 194 rupees 97 paisa. To whom? Very good. Did you understand this? Pakka? Same thing what we did, no? This is called an interest table method. We can do the same thing under product method. We can do the same thing under, you know what is product method? Let me explain. Here we did 200 into 23 into divided by 365 into 6%. Here we did 330 into 92 divided by 365 into 6%. Everything if you observe, see, divided by 365 into 6%. Divided by 365 into 6%. Everything is like that, no? Here also, divided by 365 into 6%. Am I right? So, you know what will you do? You will not divide by 365 into 6% for everything. You will do 200 into 123, 330 into 92, 330 into 62, 600 into 31. You will multiply. You will have the products. Products you will find balancing figure. Debit side is more, credit side is less. You will find the debit balance of product on the credit side. On that balance you will do in divided by 365 into 6%. You will get same 4.97. Should you get same 4.97? And then you will shift it here. By this, you know what will happen? You will save some time. For everything, you don't have to do divided by 365 into 6%. To do once, no, divided by 365 into 6%. You will take about 3-4 seconds. Okay, I'll start counting. Take your calculator. Just type divide by 365 into 6% after I say start. Okay, 1, 2, 3, start. It took about 5 seconds. It took about 5 seconds for one transaction. So 1, 2, 3, 4, 5, 6, 7, 8. 8 times into 5 seconds. 40 seconds. Will be replaced with only once, 5 seconds. 35 seconds saving. Right, what sir, 35 seconds? Hey, don't say 35 seconds. It is 5 by 40. 5 by 40 is how much? Huh? You will take 10% time. There is 90% savings in time. There is 90% savings in. That's how they compute all the savings that people do. So that is called product method. Shall we do the same problem under product method? Okay, lot of data will be same. So what I'll do is observe. See, till here it's all same. See, all these transactions are same. Whatever we had written. Till here it's all same. This is the one, no? Till here we had written. Am I right? Here also. See, we write it till here. Same to same. Now you know what do we do? We'll compute product. We'll compute. Come on, let's compute product. We'll check if we'll get the same answer. Find the product for me. 200 into 123. 24,000. Hey, that ledger, I put the same thing what was there in the previous problem. I'm just teaching you the product method now. 300 into 92. 330 into 62. 600 into 31. 20 into 0. Okay, all the transactions product over. Here. 90 into 123. 500 into 62. 500 into 31. 200 into 31. Did you understand this? Now, let's see the total. Which side total is more? Product column. Debit side is more. Am I right? How much is the debit side total? 94,020. Find the balance of product. Previously, we told it as interest. Here, is it interest? No, it is balance of product. How much? Use your calculator. What are you doing? Compute. 30,250. This is debit product balance. On this, we should compute interest on which side? Debit side. I'll write debit side to interest. To 30,250 is the balance. No. Into 1 by 365 into 6%. 4 point. Same. Now find the total here. 200 plus 330 plus 330 plus 600 plus 20. 1484 point. I'll write 1484.97 on the credit side. Now find the balancing figure, amount carried down. 190, 194.97. What did you get under the first method? Same. Did you understand? The only point here is instead of dividing everything, see, do 24,600 divided by 365 into 6%. See, what do you have here? It's the same. We are finding just a shortcut. This is not a new method of accounting. This is just mathematical shortcut. This is just instead of doing everything divided by something, you're taking one item common. That divided by 365 into 6%, you're taking outside the bracket. Processing the bracket, whole answer you are dividing by 365. It's a simple mathematical convenience, not a separate method. So in the exam, which one to follow? Whatever they ask, you should do that. Whatever they ask, you should do. If they don't tell anything, product method. Why? You don't want to take 6 months. So you don't want to take 6 minutes extra to solve the problem. So you'll take whichever takes lesser time. You get this? So you will follow product method unless they mention another method. Now, throughout I've been telling account current is not a separate chapter. Account current is not a new topic. It is extension of average due date. It is extension of average due date. Average due date tweaked a little is account current. Correct. So for the same question, shall we apply average due date concept? Shall we? Let us check. Open challenger, you can check anywhere. No one ever solves an account current question using average due date approach. Lot of students would have cleared CA foundation also. Ask them, hey, can we do account current to average? They'll be like, mad or what? Average due date is average due date. Account current is account current. You'll tell them non-yeshas student is non-yeshas student. Just tell them that. Okay. Now read the question. I've written them as receivable and payable. For our time is very important. Yeah, people usually write slowly. If I would have written no, to the extent of we've taken last about 52 minutes of class. In 52 minutes, the first problem would be written under one method. That's it. It wouldn't be able to do more than that. Now, same problem we've done under interest table method. We've done under product method. We've understood the complete logic of the topic and we're solving it in average weight method also. This is possible because I don't write, but still you understand. Got it? No? Stencil is ready. I would have to do a lot of homework. Instead, it is open for me. New file will open. Aram say, okay, fine. Let us learn together. Okay, I will teach me, you teach me. Then I'll start writing. Then it is simple. No, Aram say, chilled mood. 2 hours class, we'll do one problem or two problems and then say, see you tomorrow. Okay, come on. Read the question again. We'll unhighlight this and then start it afresh. Now, goods sold to Shyam. Goods sold to. So if the goods are sold to Shyam, this is amount receivable, no? From Nath brothers perspective. So amount receivable. Receivable I'll mark in yellow. How much is amount receivable? 200. See here, 200. 1st of October. We'll write due date straight. Then 1st of October. Due date is what I am writing. Cash received from Shyam, 90. Cash received from Shyam is repayable, no? Payable. Am I right? Say something. Okay, if you want, I'll mark this yellow. Okay, see here, payable, 90. Sari hoita? Then, October 21st. Goods purchased from Shyam. We'll keep same color. I need to keep changing. I hope it's fine with you. Purchased from Shyam. Payable or receivable? Payable 500 on what date? 1st December. 500, 1st December payable. Did you all get it? Next transaction. Paid to Shyam. If you have paid to Shyam, it is receivable. How much? If you have given him money, it is like you have given him loan. No, you should receive this money back. Not you, the one behind. Pick up, open your eyes. Artist, Kalakar. Indonesia. Okay, 330. He's made in India. You're calling him Indonesia. 330. Next. One more. Paid to Shyam. 330. But this time the date is 1st of December. So 1st of December, 330. Paid to Shyam, so receivable from Shyam. We've given him loan. We should receive that money back from him. Then goods purchased from Shyam, 500. When you purchase goods from Shyam, we should pay money to Shyam, 500. On what date? 1st January. I'll write here 1st January. Receivable from Shyam, 500. Then goods purchased from Shyam, 200. So you have purchased goods from Shyam, you're supposed to pay money to Shyam. So payable 200 on 1st of January. Last transaction, paid to Shyam, last but one. You have paid to Shyam, so it is a receivable from Shyam, 600. So 600 rupees receivable from Shyam, 1st of January. Then we have 20 rupees, goods sold to, very good. Goods is sold to Shyam, so you should receive money from Shyam. 1st of February 20. Clear? Now we'll do our average date concept. Average date, what do? We'll find the earliest of the date as base date. So we'll write here 1st of October is base date. Now we'll find from base date to each due date. Base date period will be 0. 1st of October to 1st of November. 31 days. How? October has 31 days. 1st of October we don't count. 30 days in October, 1 day in November. 30 plus 1. Now, 1st of October to 1st of December. 30 days in October, 30 days in November, 1 day in December. What do we get? 61 days. Next, 1st of October to 1st of January. 30 days in October, 30 days in November, 31 days in December, 1 day in January. 1st of October to 1st of February. 30 in October, 30 in November, 31 in December, 31 in January, 1 day in February. Are you doing it with me? Okay, next, 1st of October to 1st of October, 0. 1st of October to 1st of December, already we've computed here, 61. To 1st of January also we've computed here, 92, 92. Now we'll find product. 0 into 200, 0. 31 into 330. 61 into 330. 92 into 600. 123 into 20. Tell me the total. Okay. Similarly, we'll do the total this side also. 0 into 90. 0. 61 into 500. 92 into 500. 92 into 200. Total. Okay. Now, formula for average date is base date. That is 1st of October. Plus, we should take 88 minus 94 200 divided by 1480 minus 1280. Or you want to do 94 900 minus 88,020. Then in the denominator you should do 1290 minus 1480. So it will be minus. So our average due date is not 1st of October. It will be before the base date. So you take corresponding A minus product A minus product B if you take in the numerator. Should do total A minus total B in the denominator. If you do product B minus product A in the numerator, should do total B minus total A in the denominator. So either ways you take, it will become minus, it should become minus. Don't try to keep everything positive. It is not the attitude to keep positive, or it's not the approach towards life. It is a problem. You get this? Yeah. Now, what do we take? We'll take 94 900 minus 88,020. So denominator will be 1290 minus 1480. So what do we get? 6880 divided by minus 190. We get minus 36.21 minus 37 days. Minus How to do? Very simple. Mathematics. 1st of October 2007 minus 37 days. What do we get? Minus 36 of 10 2007. Does October has minus 36 days? October has how many days? So I'll write plus 31. Plus 30. October has 30 days. October has 30. October has 31. Sorry. 31. 31. October, November, December. Henry? ಹಿಂದೆ ಬರಬೇಕು. Oh, sorry. We're going back to September. So we deduct this. What do we get? Minus 6 of September. We should do minus 1 year, no? Correct or not? So, hey, actually we should do 31 and then minus 1. What do we get? Minus 5, no? Oh, wait. Minus 5th of September. Is there 5th of September? Minus 5? No. Here we'll do plus 30. Wait. Here I'll do minus 1. What do we get here? 25th of August 2007. We will check. Check karenge. Now let's take this. 25th of August 2007. Add how many days? 37 days. What do we get? 60. 8 2007. Is there 62nd date? Minus 31. Minus 31 is 31st of September 2007. Is there 31st date? No. Minus 30. We'll get 1st of October. Cross verification also over. Yappy. So we should write that month's date only. See, if we are going forward, then I'll do minus here, plus here. If we're coming backward, I'll do plus here, minus here. That's the logic. Everyone clear? Even if you have taken 1 day upar niche, you would have still got some 10-20 paisa difference in interest, but the answer would have been correct. But here the point is not 10-20 paisa. Date we want to get it correct. So did you understand that 25th of August is the correct average due date? Okay. Now listen to me carefully. What is the average due date? ಅಯ್ಯಯ್ಯೋ ಹೋಯ್ತು ಹೋಯ್ತಾ one moment just 25th of August 2000. Everyone understood 25th of August 2007 to be average due date. When are we preparing this entire account correct? First of, that is the date on which it's getting settled. You should have settled on what date? 25th of August. If it has settled on 25th of August, there would have been no interest payable or interest receivable. We didn't settle on 25th of August. We're settling on 1st of. So how much is the period of interest? Now, date of settlement, 1st of February. Date of settlement, 1st of February. Compute the time period between 25th of August and 1st of February. How many days? 160 days. 160. How? 31 days is there in August. 25 days is over. 6 days in August. 30 days in September. 31 days in October. 30 days in November. 31 days in December. 31 days in January. 1 day in February. 160. What is the interest? Compute interest. What is the amount? Amount is this 1480 minus 1290. 190. Difference amount pay will compute. On interest rate is 6%. Amount is 1480 minus 1290, 180. That's the net difference. No. Correct. Now compute 190 into 6% into 160 by 365. 4.97, 4.2 paise difference. Not even 20 paise, 2 paise. So we'll round it up to 5 rupees. It is that 190 rupees plus that. So amount receivable is 194.99. Did you get the answer under average due date also? Same answer. Now the question is, Why do we do account current then? We can follow average due date only. We can do average due date only. Why do we do account? Huh? I told you in the beginning. I'll tell you the reason at the end. Then I told the answer in the beginning only. What did I start with? Account current is running statement. What is it? Sir, what do you mean by running statement? Now, you've done this average due date. No. After this much data is written, I will tell one more transaction. One more transaction later. Purchase or sale. What will you do? You need to enter that transaction. Period will come. Amount will come. Product will come. So here this amount to numerator will change. Your denominator will change. This fraction will change. This days will change. This average due date will change. If that average, this period will change. Then this interest will change. Then this will change. Everything will change. Or let's say in account current, you prepared account current. I'll tell you one more transaction. What will you do? You will enter the transaction here. Balance of product will change, interest will change. All of these items, it will remain the same way how it is. Are you getting what I'm trying to tell? So this is a running statement, meaning you can go on adding transactions to it. You can go on adding. This is open for changes. When we add a transaction, this can accommodate another transaction, but average student cannot. So when the scale of operations are small, we have defined set of transactions and we are doing it on a specific date, we can do average unit and then close it. However, if the scale of operations becomes big, you want more detailed data and you want to keep it a running statement. After that, if some more transactions happen, we want to include it into it. Then we'll do account current. Did you get it? This looks more like accounts in comparison to average unit. Average unit, what we did yesterday, look more like a chapter from mathematics. Did you understand this? Now do you feel like, yes sir, I have understood what is account current and how to prepare the same? Then we'll start copying. Yes. Pakka. Confident enough? Same thing. What we do as two different tables, we'll write one next to the other. We'll write one next to the. There we give one number to each of the date and then find average date and then find that average date to year end interest. Here what do we do? From the day to last date, straight away we'll find interest. In average date, what do we do? We'll assign one number to each of the dates and we'll find the average of those numbers. Again, convert that number to date. And then from that date to year end, we compute interest. Here, what do we do? This dates to one average date to interest, everything is skipped. Straight away from the date to year end, from the date to year end, or the date on which account current is prepared. Compute interests. Add them up and then you get it? Which is more simpler? Which is more practically viable? Very good. Shall we start writing? Come on, guys. Start writing. Come on, boys and girls. Let us now start with illustration number 2. Amit and Piyush. Shh. Silence. Observe. This is an examination question. January 2021. From the following particulars, prepare an account current as sent by Mr. Amit to Mr. Piyush as on 31st December 2020 by means of product method, charging interest at 8%. Sir, they washed product. It's okay. You do interest table at home. It will be practice. Got it? Do more practice before first attempt rather than doing more practice after first attempt. So sent by Amit to Mr. Piyush should remind you at multiple occasions. You should remember, that should never be forgotten. Mr. Amit to Mr. Piyush. So Mr. Amit is giving to Mr. Piyush. What should be the name of account current? Piyush in account current with. Very good. Piyush in account current with. When we write Piyush in account current with Amit, it is in the books of Amit. We're doing Piyush. In the books of, we're doing, whom are we representing? Every transaction should be seen from whose perspective? Fantastic. Ready? Start. 1st of September 2020. Balance due from Piyush. So for us, is it receivable or payable? Receivable. Right next to it. Receivable. Receivable. If it is receivable, debit balance, credit balance. Debit balance. I'll write on the debit side. See, in the books of Amit, this is like Piyush account. Piyush in account current with Amit. What is the date of transaction? 1st of September 2020. 1st of September 2020. Balance brought down 900. Balance brought down after that. Next transaction. Sold goods to Piyush. What is the entry for sold goods to Piyush? Piyush account debit to sales. So in our Piyush account, we'll write two sales. How much? 1450. 15th of October. Have they given due date? So due date will be 15th of October only. Done. Next. 20th of October. Goods returned by Piyush. Piyush is returning the goods to us. To us it is sales return. Entry is sales return account debit to. So in our Piyush account, I'll write credit side. By sales return 20th of October. Amount is 250. Got it? After that, 22nd of November. Piyush paid by check 1200. Piyush has paid by. If Piyush has paid by check, what is the entry? Bank account debit to Piyush. So in Piyush account, I'll write by bank. Date 22nd November 1200. If they would have told on the check the date is 1st of January, then we would have written here 1st of January in due date column. Just giving you additional information, which is not required for this problem. Got it? 22nd November. Then last transaction. 15th of December. Received cash from Piyush. What is the entry for received cash from Piyush? Cash account debit to. So in Piyush account, I should write by cash. How much? Date is 15th of December. Done. Entire problem with data is over. Now we should just prepare product and then find interest. Now, before that, shall we find period? When are we preparing account current? Account current is prepared on 31st December 20. When is it prepared? 31st December 20. So from the date of the transaction or due date when it's available to 31st of December 2020, we should compute period. From the due date to 31st of December 2020, we should compute. Shall we compute period? Everyone's ready? Okay, come on. 1st of September to 31st of December. How many days? 0 now. How did you do? How many days in September? Okay, 29 in September, 31 in October, 30 in November, 31 in December. Okay, now we have something to listen. Something to listen. Please listen. I purchase goods from you today. I purchase goods from you. I paid the money to you today. Should I pay any interest? I purchased the goods from you today. I paid the money to you today. Should I pay any interest? Answer is no. Answer is, if I purchase goods from you today, I pay the money to you tomorrow. Should I pay interest? How many days interest? Which is that one day? Today or tomorrow? Tomorrow. If I purchase the goods from you today and I pay tomorrow, I'm paying one day interest. That is tomorrow's interest, not today's interest. Are you getting it? Very good. Now listen. I purchase goods from you today. I purchase goods from you. I didn't pay. I didn't pay. 30th September tak I didn't pay. 30th September also I didn't pay. So in this period, you compute some 27 days interest. Got it? Okay, I paid on 5th of October. I paid on till 30th September, we prepared one separate account current. For October month, we are doing account current. When am I making payment? 5th of October. When am I paying amount? In October, will you compute interest for 5 days or 4 days? Think and answer. 5 days. You should compute interest for. Why will you say 4? Is the 1st of October the date of transaction? No. 1st of October is just another day. If in case I had purchased on 1st of October, paid on 5th of October, you would compute interest for 4 days. If I purchased on 27th or 28th or 3rd of September, September 30th tak interest is computed. In the month of October, when you compute, you will count interest for 1st day, 2nd day, 3rd day, 4th day as well as 5th day. Clear? So here, read the first transaction. It is balance brought down. It is not transaction. It is, this balance is because of the transaction that has already happened in the month of August. Are you getting it? So if we receive money on 1st of September only 900 rupees, still will collect one day interest. Still will collect. If it was sales made on first of September, and then we collect money on 1st of September, should we collect interest? No. But if it was sale made in previous period, it is balance on 1st of September. We collect on 1st of September. Should we collect interest? Yes, we should collect interest for that day also. So for this 1st of September transaction, when you compute period, you should take 30 days in September, not 29 days. Did you get the logic? 30 days in September, 31 days in October, 30 days in November, 31 days in December. 120. Did you understand? Usually people don't tell this logic. They will say for opening transaction you do plus 1 day. Opening transaction you do? Why plus 1 day? No, do it. Just do it. We are not just doing it here. You understood the logic, no? On the date of transaction, if the amount is settled, no interest. If the amount is paid on a date other than the date of transaction, interest is computed. Not for the date of transaction, from the next day of the transaction, even on the date of payment. This is not the date of transaction. This transaction has happened in the previous period. So even the first day has to be counted. Are you getting it? 1st of September is not the date of transaction. So 1st of September is also counted. Done. Next, 15th of October to 31st of December. October 15 days. Sorry, October 16 days. 30 in November, 31 in December. How many? 77. Pakka? Okay, come on this side. 20th of October. 20th of October is 11 days in October, 30 days in November, 31 days in December. 72. Here, 22nd November. So 18 days in November, 31 days in December. Sorry, 8 days in November, 31 days in December. 39. 15th of December means 16 days in December. We have it ready. Shall we do interest table or product? Product. Come on here, identify product. 900 into 12. Oh, sorry, 900 into 122. 1,09,800. 1,450 into 77. 1,11,650. Come on this side, 250 into 72. 1,200 into 39. 600 into 16. Now, which side total is more? Product. 2,21,450, 2,21,450. Find the balance of product. 1,47,000. This is debit balance. On this, interest has to be computed on which side? Debit side. I'll write here do interest. 1,47,050 into 1 by 365 into 8%. What is given in the question? 32 point. Very good. 32.23. Now find the balance in figure in amount column. 900, 1,450, 32.23. 2,382 point. Let's write 2,382.23 here is well. Identify the balance in figure. So Amit has to receive from Piyush 332 rupees 23 paisa. Amit has to receive from Piyush how much? 332 rupees 23 paisa. Did you get this? Easy to do. Same thing you could have done under interest table method also. Are you getting it? So we're done with 2 questions. How many are there? 7, 8, 8, 8 only 2 done. 6 left. Okay, yes, 6 left. Even if we take 1 question as homework, we'll be left with 5. So we can do it. It is not impossible. Shall we take a break? It is 10:06. Let's take a break here. See you all at let's say 10:30, 10:40. 10:40. Okay, take a break. See you all at 10:40. When we meet at 10:40, we'll be doing the next set of questions. So people watching it online, you can see to the description of this video and you'll find the link to this file, link to the file for which in which the solution to these questions are basically there. The entire solution is shown in one screen for those who would want to take screenshot. This is the product method answer. And question number 1 solution also I'll show it for those who want to take screenshot. Entire question number 1 solution in one screen. Entire question number 2 in one screen. That's it, guys. Take a break. See you all later.